You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here. Raining all day here in Arizona and snow up in the mountains. How was it in Vancouver?
Oh, it's been raining since June, I think.
Okay. All right. So
yes,
we're getting some winter weather here, I guess, in the North Country.
But so far in Greater Vancouver, very little snow, and we're happy with that.
There's no snow down here in Phoenix, but there is snow up in the mountains.
Where it belongs.
North, so.
Where it belongs, on the mountains.
That's where it belongs. The skiers like that.
Oh, perfect for skiers. Lots of snow up there. Of course, wet weather in Vancouver translates to a lot of snow on the other side of the Rockies.
Okay. So the skiers, they don't go there, though. They go north up to your ski area.
Whistler, yeah. Or Big White if you go into the interior. There's lots of ski resorts here. They're not lacking snow this year.
Oh, that's good.
The stock markets, when we went into the new year, we talked about the first week of January can set the tone for the whole year. So what kind of tone are we hearing?
Well, it's a mixed one so far because you're getting, a couple up days, couple down days. There's the Yale Hirsch early warning system that he created years ago, and it says you have to look at the first 5 days. So we're only into the, let's see here. So you had 1, 2, 3, 4. Okay, you got 5. So net for the 5 days we're up. We were down earlier today, but managed to come back a little bit. It was actually up on the day. So yeah, so it's positive. I'm just looking at the early, he calls it the early warning system. So with the first 5 days up, that's bullish. Now, the question is, do you get confirmation for the whole month? Which is obviously we're not going to know for a while, and the Fed meets the end of the month. I don't know if that's going to put a damper on it or there'll be a lot of volatility before then. But we'll have to wait till the end of the month to see if net we're up for January, and then you get a confirmation signal, so to speak. It's an arcane indicator, like the Super Bowl indicator and Groundhog Day and all the fun stuff I play with and you look at. But it does have, a certain probability. And, the market participants, for the most part, were really nervous and I would say a little bearish here because some of the micron or chip stocks, high-tech stocks like NVIDIA, a lot of the high flyers, the Magnificent Seven, you can go down the whole list, including Netflix, which obviously was down because of the Warner Brothers acquisition, but the big 7 names, for the most part, have been underperforming here. And since so much of the market, has been weighted and influenced by those stocks, there was, a lot of concern, and they were way overdone, and they were due for a pullback. So the fact that the Dow Industrials managed to rally, it shows that market's getting rotation into more sensible name stocks, like, a Procter and Gamble or a Johnson and Johnson, or, just, basic names, and, money is sort of moving away, and in particular the oil stocks, which had a nice move here in the last 3 days, regardless, or maybe in conjunction with what's happening in Venezuela. So it's real interesting because we got long the oil stocks. And today, oil had a little bit of a breakout on the charts. It's not confirmed yet, but I sort of had the feeling that oil could be a catch-up play here. And that's not really good for the market in theory, because if oil takes up, that takes off. That's sort of a tax on consumers. We've talked about that. Everybody does. So oil popped its head up a little bit today, but the oil shares been rallying ahead of this. And the bottom line is, whoever's investing in the oil shares believe that these companies are going to make money regardless, and whether oil stays at these current low levels or indeed does rally, And many of the oil names, big name stocks, I'm not going to mention names because people could subscribe to the letter and they can see the names in the subscription, but many pay some pretty good dividends. And, some like 4 or 5%, 3, 4, 5% type of dividends, which is sort of music to the ears to people who want a more conservative portfolio, who maybe don't enjoy owning, high flying, tech stocks or AI stocks or chip stocks or, nuclear stocks and the whole kit and caboodle, which were under pressure here a little bit in the last couple days. So, to answer your question, the early warning system is positive. It's a reflection of the Dow, and it may not reflect the NASDAQ or other indexes, but that usually when you look at it, you're looking at the Dow Industrials, and many argue that's, sort of antiquated because the Dow is only 30 names compared to the thousands of stocks that are out there, or even the 500 that are in the S&P 500, but we'll see how the rest of the month unfolds, Jim.
What about base metals like copper? How are they doing?
Well, all the metals have been doing great, overall, in terms of the last, few days. Copper 2 days ago hit a new high, a new relative high. I think it got over $6 if I'm not mistaken, but I'm looking at like Freeport McMoran 2 days ago hit a new high. Southern Copper, that's SCCO, hit a new high 2 days ago and it tagged the high today. So copper's been positive. In fact, all the metals basically have been positive. We've had a lot of volatility here, with the gold and silver, platinum and palladium as well. But, they had big runs and they also had some sharp pullbacks and then try to bounce back again. And now like platinum is pulling back a little bit, ran up, pulled back, went back up to its high and then started to pull back again. It's a tough call. I mean, the metals are in play, obviously, but they're extended. And, I get a lot of questions about silver. And, after that big breakout above that big $50 level, which held for two big times, back once in the 1980s and once again, I think 2011, the fact that we broke through it is sort of comparable to, gold finally clearing, well, first years and years ago when it cleared that $1,000 level, and then 2000 was the next big number. So on a strategic longer term basis, it's an important breakout. If you're a trader, you get nervous because the charts say, well, silver got up to $84 and the breakout level was $50 from, generations back here, and maybe we'll pull back to that level at some point. So it's a flip of a coin. I could argue that it needs to pull back now, or I can say it's going to go to $100 or more and then pull back at a later point. But I think the strategic answer is the fact that you had the breakout after so many years. And we have, a president here in the U.S. who is very pro-gold. And there's been talk about backing treasury bonds with gold and all kinds of fun stuff. And we're not even talking about the BRIC nations and what they're doing with gold and trying to create an alternate currency. And we can spend forever discussing all the variables out there, including the hoarding on the part of China and Russia and so forth. So, you got to either wear your trader's hat or you just keep the coins in the vault. Because you look at all the time it's taken for them finally to break out. I mean, all the years, silver went nowhere and gold languished, and finally in the last 2-3 years it started to move. You got to believe that maybe this is more of a sustainable type situation, that things are a little different now than they were back in the 1980s or in 2011 or even 1971 when Nixon took us off the gold standard. So things are sort of changing. So I'm, I would point out that, platinum, which, is still cheap. I mean, I remember not too many years back, Jim, I'm sure you remember too, platinum sold at a big premium over gold, you went to buy gold, and I don't know how many years we have to go back, but gold would be $800, but platinum would be $1,500 or $2,000. There's always a super premium over gold. And now it's still at a huge discount. It's trading at less than 50% of the value of gold. So it seemed to me that, it's a rare metal. There's a lot of need for that. There could be a lot of catch-up in a platinum. Palladium also, but maybe not as much. And you mentioned copper, which has been strong. So, worldwide demand, or I guess it's a investment choice as a hedge towards whatever they think we're hedging against. We can talk about inflation or war or whatever their rationale is, but it's there. The high-tech industry, needs the metals. Big fight over rare earths in China and our ability to potentially replace that, and how are we going to do it, and where are we going to get it? Is it going to come from Canada? Is it going to come from internally here in the U.S. or from other countries around the world? So the whole metal sphere, it's crazy. So bottom line is, you got to decide again, as I mentioned a moment ago, are you trading or investing? There are pullback numbers on the chart, and you could see a shakeout in both. But I think the big picture comment is you might want to hold on for the ride, because I don't think it's over yet.
What's going on in the crude market?
Well, I just mentioned we're along the crude oil stocks. Crude oil actually broke out on a little down channel, a little what we call like a bear flag formation on the charts, and sort of broke out of it today. It's not confirmed yet. You need another day or two up. But that was, technical breakout a little bit in crude oil today. The shares have, big name shares. Again, I want to mention the names, but, we've had them in our newsletter, talked about those. They've been moving, for the last few weeks, there's been buying coming into the oil shares themselves. Maybe it was anticipation of Venezuela. But the bottom line is, the oil companies, are making money. They're paying dividends on these stocks. So, I'm more bullish on the shares. I'm starting to get bullish on crude oil itself based on the action today, but I need to watch it a little bit more.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, there were some things you wanted to talk about today, so go ahead.
Okay, so we got, the big question is, are we going to see a black swan event at some point here in 2026? Big question mark. Is something going to come out of the left field and maybe not necessarily surprise people, but be the trigger for, what some feel to be an overdue correction? And if you look at the charts, you can argue both ways. You can argue the S&P is sitting, around the 7,000 level, which is, basically new record highs. And there are measurements up to 7,500 if you're a technician, but there's also a retracement number all the way down to about 6,100, which is one heck of a correction. So you're looking, 20-30% risk to the downside. So, the question arises, is there going to be some surprise event at some point this year? And we can speculate, could it be the midterm elections in November, which is way, way out? For example, could there be more incursions into other countries that might make the market nervous? Venezuela didn't, but are we going after Greenland or Cuba or other, countries or territories? You've got the big change coming up, mid-year with the Fed chairman, who's going to be the new Federal Reserve chairman. There was one name that I thought might be a candidate, but this gal had been rejected apparently in front of the Senate in the past. Her name is Judy Shelton. The reason why I thought she might be a possibility, which may not be the case, but she's a big proponent of gold in terms of providing backbone to the monetary policy. And since Trump is so positive about gold and its involvement and the restoration of our credibility as a government and backing our debt and currency and so forth, I thought she might be a good candidate as a Fed chairman, but that may not be the case. The big story pending also now is that could be a black swan event. Many may say it's just the opposite. Maybe it's a positive. What's the Supreme Court going to do? I mean, they're looking over the tariffs that Trump has imposed and whether he legally had the power to do it, even though several presidents in the past have invoked their executive power. The argument is, well, they were basing it on some legislative act that gave them the permission. Trump is using an act which is questionable, whether that would be the questionable, move here on the part of the president, whether that could be validated or not. So now we have the Supreme Court, day to day. We don't know if that's going to come out in one day or 30 days, but what happens if they say all the tariffs that Trump invoked are invalid? What does the market do? Does it explode to the upside? We're thinking, gee, all this money, even though we have to pay back, it brings down costs for companies, and companies can start making a lot more money, even though it's not earned the way that we would hope that it would be earned, in terms of fair trade between the countries, and that could explode the market to the upside. Or would the Supreme Court Act cause the market to have the so-called black swan event and sell off? Because there are negatives to revoking the tariffs. It's not only a positive. Some people would view it as a positive, but others may not. So, what's going to happen there? We just, and then we have, Donald Trump making comments the last couple of days about how defense companies should not be allowed to buy back their own stock. This is basically financial engineering, where companies buy back their own stock, and reduce the float of the stock, which supposedly, the intent is to increase the value of the shares because there's less shares around. So if you buy back the shares, the earnings per share will go up, so you can drive the stock price higher. And he says, no, don't put your money into that. Put it into your company, into expansion, into employees, into research and development. In fact, that's been an argument for decades about financial engineering going on Wall Street. Companies, rather than putting money into their own companies, expanding and doing things, buy back their shares, and that may help the shareholder price and make shareholders happy, but doesn't necessarily help the company or its future or the customers. So it's interesting that he picked the defense companies for this, but that's been an argument for, at least I've been involved with for decades. Is this really legitimate on the part of companies to do this? And they've been doing it. And it's financial engineering, and so long stock prices go up, shareholders don't complain about it. But just something to think about. And finally, the other sort of big news that's pending out there, which not news to probably anybody but myself, is the UFO disclosure. Has been pending now for the longest time. You can pull it up on the internet. There's all these commissions on Congress, all this stuff going on. It makes no headlines whatsoever. And the question is, will anything come out this year on the UFO disclosure front? And those who've been following that subject, as I have for decades, we don't like to hold our breath because we never seem to get the answers we want. So that's also on the list of big stories for the 2026. Will we get more disclosure there or not? And finally, the other big story is, when will Elon Musk's SpaceX go public? He has talked about it could be one of the largest IPOs in history. I don't want to cite a specific number, but it's a huge number, that it might be, again, the largest IPO in terms of dollars. And the question is it coming this year, or is it coming next year? And, obviously, funding SpaceX helps get us to Mars quicker. And I'm sure, there's a lot of push get us to Mars and do other stuff in space. Of course, there's always been discussion. There's lots of secret space programs and stuff going on that we're not told about, which is a whole other subject altogether. But the question is, how do investors participate in SpaceX? And in my newsletter last week, we listed all the potential companies that have purchased private shares in SpaceX before the IPO. We can't, as mortals, we're not allowed to do this stuff unless we're institutions and we got big bucks to buy some private shares from Elon Musk at SpaceX. But apparently shares have been sold to various funds There's a whole list out there, and some own, different percentages of a potential IPO. So if you want those names, you can research those. Those are ways to participate. But the question is, when will it go public, at what price, and how much will be raised, and how can we as investors participate? So it'll be an interesting story. It may take 12 months to unfold. There were rumors that it could have unfolded after the beginning of the year, and it should make a lot of headlines, particularly if the kind of money they're talking about is raised. And you would think that would sort of help Tesla too, because you're not same company, but they're sort of affiliated companies, and there might be some benefit to Tesla shareholders as well. So it's not a big story in terms of, the value of a very big company and the value of another company, which could be an historic valuation. And so something to keep your eyes on. And when and if it goes public, that should be another investment or trading opportunity out there. So just a lot of interesting stuff going on. It's going to be a very big year, a lot of stories pending, Jim. And we, even day to day here, we're just seeing a lot of interesting stuff. In fact, just after the close today, there was a story that came out that Donald Trump put out a bulletin or a request or whatever you want to call it, that he didn't name who it was in the government, but he basically said Trump instructs representatives, quote unquote representatives, to buy $200 billion in mortgage bonds. So are you talking the Fed coming in to do it, the Treasury? I don't know who the representatives are, but apparently, he's doing whatever he can to lower rates. So the theory is what the Fed does may or may not affect the mortgage rates, but if quote unquote representatives, I don't know if it's the Treasury itself again, I don't know, they buy mortgage bonds, that helps reduce mortgage rates. And that's part of his, political agenda, with midterm elections coming up and stuff. If we get mortgage rates down and home prices moving, so stocks that have been acting better in the last couple of days the big name would be Home Depot, which would be one of the big benefits of home buying and home improvement and so forth. And there are some other companies out there that benefit from that. So this just came out after the close today. So the push to get mortgage rates down, because we can't depend on the Fed to do what it needs to do, and or the fact that what the Fed does doesn't necessarily connect to the mortgage bond or the Treasury market, which are different markets, which very few people understand. But though it has a psychological benefit when the Fed lowers the rate. So we know rates are coming down because the new Fed chairman's going to come in, whoever that is, because they're going to be working under the wings of Donald Trump. But I thought it was interesting that the mortgage bond story came out after the close. So, that's bullish for the markets if we can really drive long-term rates and short-term rates down, whether it's the best decision long term, it at least gets momentum going, and particularly in the housing market, it seems to be needed. So interesting stuff going on, Jim, and a little carried away here, but I just want to cover some of the key points I think our listeners would be interested in hearing about.
The president also said he wants to see institutional buyers stop buying residential real estate in bulk.
Right. That came out yesterday, I believe. And, there's been in fact, I just attended a convention called IMN, and they just had one in Scottsdale. Actually, I was a moderator of one of the panels, and they hold it in Scottsdale every year, and they have different versions of it around the country. But there were a few thousand people that showed up. What it was single family. It was called the Single Family Resident Meeting or Convention. So the people there represented individual homes and usually a bunch of homes. In other words, a lot of the participants own batches of homes, portfolios, whether it's hundreds or dozens of homes, and they're pretty much for investment purposes. And there are institutions out there that actually they call buy or finance to build, or some buy to build, some phrase like that. And actually they finance the building of huge tracts of land and homes just for investment purposes. and they own the homes, and they rent them out. And apparently, this doesn't help the individual. It helps the institutions that are buying these homes and control the vast blocks of homes that are either rented or maybe sold at some point. So the institutional control of the residential market has potential negatives to it over the years. Too much control by too few people. You can argue it could drive prices up or drive prices way down. And, too many homes are in the hands of too few people. Years ago, this wasn't the case. People owned individual homes, or maybe somebody owned a few homes and rented them out individually, and they became like a little side business, but then the institutions got involved, and big ones. Blackstone, I think, is one of the big names, public names that is out there. It's a public company, and they just, buy tons of homes. So the president decided that, just like he came out today with representatives to buy $1 billion of mortgage bonds, that's to help the individual and the small home buyer and seller. What you're saying is to discourage the big institutions from being in that market, which apparently have distorted it against the individual to the favor of the big institutional money. So it's be interesting how that all plays out. But stock, like I mentioned a few moments ago, Home Depot rallied. It's still well off its highs, but it's coming off a bottom because that's one of many names. We can list a bunch of names that are beneficiaries of these type of actions, but that means that the market feels that the home market may come back to life, and we'll see how that all plays out. It's real interesting stuff.
Anything on the geocosmic front we should be keeping an eye out for besides our astronaut who may be very ill aboard the space station?
Well, we do have, we do have, solar and lunar events always on the calendar. I think it's best just to check with the newsletter. The biggest story is there was apparently in space weather today about there was some explosion on the far side of the sun, but the Perseverance rover, which is on Mars of all places, was trying to take pictures of it, and it couldn't, apparently, because of, Mars is at some conjunction to the solar angle or something where it can't get pictures of it. There's some technical reason why it couldn't, but there's some action on the far side of the sun. And what this explosion is all about, and whether it's a sunspot related thing or not. This may sound a lot of nonsense to people who are listening, but it's not, because these sunspots, if they face the Earth, they can cause a lot of interference and weather changes and the potential great damage to the planet in terms of the energy that's emitted from these sunspots. So that's why the NASA and others track these things. We can't do anything to stop them, but they're always something that we like to pay attention to. So that's sort of the big one, in terms of the short-term news there. And again, if you check with my newsletter, you can check some of the other short-term cyclical events that are coming up. The big event, though, is what we discussed at the top of the hour, is, the early warning system and how the market acts in early January. And this is sort of a cyclical event, and we'll see how it plays out for the rest of the month. So that's sort of where we're at. We'll see how it plays out in January.
Any thoughts on Bitcoin?
Always thinking about Bitcoin. That's a good question. We're in it on a smaller position. We sold a bunch of it in early November when it looked like we were going to have a correction. We jumped back in on some partial positions. Overall, very bullish, but on a technical basis, the proof is in the pudding here. You had a correction in Bitcoin itself from 126,000 to 80. The chart said you might rally back into the mid-90s to possibly 100, and then possibly after that come down again. And we're in this channel looking at the charts, and we'll see how it all plays out, whether we can actually get to or break out above 100, or whether we're going to test the 80 level. And the conventional thinking looking at the charts is, you don't know. You got to see which end comes out. It was a big shakeout. My gut feeling overall is when you get these big checkouts, you scare a lot of people, and they become big buying opportunities. And in this case, it was, because it dropped 80,000 and bounced all the way back to the low 90s, and now it's sort of hovering at that level. The bear case is if you take out 80, you can create technical measurements, even some as low as 50,000 in Bitcoin. There are a lot of levels between that and 80, but you can argue that as well. So just have to watch the charts if you're trading. But I don't think the game is over for Bitcoin, and certainly not for the other cryptos that are out there. There's a lot going on with the government, and the Clarity Act is still in front of Congress. I don't think it's passed yet, but that's part and parcel to getting all the legislative details behind us so that the air is cleared in terms of institutional investing and others into the crypto market. We can't forget that Donald Trump is creating a national Bitcoin reserve and as well as a crypto reserve. So the winds at our back in terms of the government involvement in the crypto, and not necessarily Bitcoin as much, but the entire crypto market. And many of this is not just related, it's not speculation. It's for practical purposes, like the new stable coins that have been approved, which allow people to transact in the stable coins that are backed by the dollar in full faith. So there's no risk there. And there's so much going on in the market. But as I mentioned, I think previously, if you're in this market, you've got to take a multi-year perspective. I mean, look how many years you had to be patient for gold and silver. I'm not saying it's going to be that long, but, over the course of the rest of this decade into 2030, I think you're going to see, more appreciation and more activity in the crypto market. And whether 2026 will be a choppy year or not, it's tough to say right now because, as I mentioned, we're trading within these ranges, particularly with the Bitcoin. But, overall, you have to be looking to buy big sell-offs and taking, a longer-term viewpoint, though, of course, you can always trade it along the way. I know a lot of traders who were buying Bitcoin when it got to 80, 81,000 and made a lot of money here just on a bounce into the 90s. That kind of stuff always goes on. One of the favorites out there you hear about is a little one called XRP, which was trading, I think, about 360 earlier last year and dropped all the way down the last few days down to 175 and got up to about 230 the last 235 the last 24 or 48 hours. So you're talking, nice percentage moves for those who trade this stuff. But your question is, it really is this an okay market? And yes, I think it's okay. And you should take a position, at least partial, as an allocation in your portfolio.
Mark, thank you so much for chatting with us.
I'm happy to do it. Thank you.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. He was speaking to us from Arizona. If you have any questions for Mark or for any of our guests, you can send them to info@housestreet.com and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on X @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.